Hi, welcome to the video day, 13th of September on Tuesday. It's our weekly Forex forecast. In today's video, we're going to pick out some pairs which we think could offer really good risk to reward trading opportunities. Got plenty of pairs to look at. We'll go over the charts in just a moment. Now, also in this video, I want to give some tips on getting in to big trends with low risk and high profit potential. So some tips on entries. There is a lot of volatility in the market at the moment. You do have big trends. You've got a lot of noise and erratic price action as well. Now, in terms of the markets, volatility is high, and I think it could get even higher as we move in to the end of the year. A lot of interesting opportunities to look at, so let's go and take a look at them right now. Just before we do so, if you want to learn all our trading techniques, learn our strategy, and also check out our daily technical sentiment analysis of 14 FX pairs, all you need to do, go to the link beneath this video and you can get live access to our members, and you can also join our Facebook group of traders if you wish and follow our Facebook page. Right, let's go and take a look at the opportunities. All right, first chart is Euro USD, and you can see the Euro rally there and then a nice red today. I think we're going far lower. Now, before I talk about levels in terms of entry, stops and targets and so on, just want to go through why the dollar is firm today, and obviously, not obviously, but a great way to get low risk entries is to trade high impact news. And look what the market is expecting and discounting. Okay, now the dollar did sell off. Why? Because basically the market was looking for US inflation to come in lower on the headline and lower on core. Now, in terms of this, market sold the dollar off into the number. They're expecting a weak number, okay? But if they're expecting a weak number and the market has already discounted that, you can look to buy the dollar, okay? There's other reasons to buy the dollar as well, which I'll go to in a moment. I've just done this chart here. This is headline inflation. It fell a bit. It was supposed to fall to 8.1. It didn't. It's still stubbornly high, okay? I haven't put the core chart in the website yet, but the core actually went up. So the Fed are going to be very hawkish going forward. The market now has to reassess where the Fed are going to raise rates soon. You can see this here. Pricing a 20% chance, 100 basis points rate hike next week. It was only 75 basis points before the meeting. I think they'll do 75 basis points, but you can see how the market reevaluating how hawkish the Fed will be. And of course, the dollar is going up. They're actually now pricing a 75 basis points hike in December, 50% chance. That has just come in to the equation. Before it was 50 basis points. And then year end, they're looking for a Fed fund rate about 4%. And then they're looking for cuts because the economy could plunge into recession. Now, is that bearish for the dollar? No. I mean, this is just out and out bullish for the dollar. Now, in terms of, just show you this chart, it's just to do with the dollar generally. Okay, it's called the dollar smile. I'm sure many people are familiar with it. US recession or synchronized global slowdown, USD appreciation. We do have a slowing global economy, don't we? And it's going to slow further. It's another bullish dollar fundamental. Now, in terms of, where's my next chart? No, I don't want that one. On this one here. World economy is heading back into recession. I've shown this chart before. It's a forward-looking indicator or leading indicator, sales manager index from World Economics in July. Global economy going into recession below the 50 line. When August figures come out, they're going to be worse. Then you've got the US economy teetering on the brink of a recession. Doesn't matter if it goes into recession, dollar goes up. So there's a big bullish dollar backdrop. You've had a correction. CPI has now boosted the dollar. The dollar uptrend should continue. Now, I just want to look at this chart here to do with the euro. Now, in terms of the euro market, looking for the ECB to raise interest rate. This is Italian bond yields. Why are they important? Because Italy has got huge amounts of debt, cannot take higher borrowing costs. If bond yields continue to move up, Italy could be in trouble. It's kind of bubbling away in the background. There's no doubt that the situation in Eurozone is terrible. I've shown numerous charts before in previous videos. We're already going into a recession below the 50 line there. You can see all these Euro indicators, manufacturing PMIs, consumer confidence, they're all plunging. Okay, Germany obviously in bad shape. Yeah, look at it. It's just basically indicating recession is coming. And I did do these charts a little while ago, and the euro's bounced since. Euro USD is not cheap. Okay, it's got a lot of downside. That recent rally is a sell. Okay, let's show you one more chart. There's some on the energy crisis, which everyone's familiar with. How far could the Euro USD fall? Basically, this chart is saying 90. This model comes from, where does it come from? Sorry, Nordea. Very good at forecasting, Nordea. Really like their research. So we're looking for Euro USD to go to 90. Now, in terms of, sorry, I need to go to this chart. This is the chart I drew this morning in terms of Euro USD, if I can find it. Here it is. We were already short at 1,080. Okay, stop 102.30. You can see us just below the level. Now, in terms of, we didn't get stopped out, but if we had have been, or stopped tight behind the level, just sold back through 102 with a stop behind 103. Saying this morning, if you wanted to come in, you just come in through this body here, so through 101. Okay. Basically, through 101, we're now just down at the par level. So I think that is a sell. Long term, to go 96, then 90. I would have to stop initially behind 102. Okay, so you're risking 130 pips, which isn't too bad against the reward we've just mentioned. And if we take out this par level decisively, I think you could bring the stop behind these bodies, so to something like 101.40. So yeah, I think it's turned. If we follow through, I think we'll get new chart lows and then longer term onto monthly support. We've been trading the euro short all year, and if you take a big monthly chart, you can see how it's done. Not too many green candles on the upside. Okay, where should we go next? Let's go to USD CAD. We're on the monthly chart. I shall just stay on the monthly chart at the moment. We're looking for a move up to 135 and then 140. Now, in terms of, you've got a slowing global economy, we've just seen that, you get lower commodity prices. Okay, so commodity currencies tend to go down. Okay, so in terms of the daily chart, really nice blue up. You had the sell-off into the number, okay, into the CPI, then a nice rebound, and we'd actually been stopped out of this one. We stopped out of a few of our dollar longs on the retracements. But if we look at USD CAD, you can see how you could have played this if you had the same view of us as us on CPI. Of course, we could have been wrong, but yeah, you don't have much risk against your reward. So we'd actually already come in at 101.30. Sorry, 130.30. I was a bit early. Saying this level here should hold, just come back in through 130 if you're coming in fresh. Obviously, it's moved up really nicely. Now we can change the stop. Now, if you're doing it fresh, that is a buy in our view. Stop behind this level here. So you want to be, let's say, 129.70. Okay. If we get away and up towards the 132 level, you pull your stop up behind the next round number. Keep in mind, yeah, there's plenty of upside on the monthly chart. Okay. AUD USD. Nice downtrend, up, brief poke through the round number here, 69, and then down. If I go and look at our chart from this morning, where is it? Sorry, here we are. This is one we didn't actually get stopped out on when the dollar had its correction. Still in at 70.90. We did come close to stop, but we think go down to 65, then 60. This is still the key level, okay, 69. So basically, if you're doing this one short, you need to be back behind the 69 level. Your risk is basically, what is it? It's about 160 odd pips, okay? But you're looking for 65, and 60 is obviously the target we hope we get to. So 760 more pips to go, hopefully. If we were to keep selling off, and we sold off through the 67 level, I would tuck the stop probably behind, well, I would tuck it somewhere behind the 68 level, so 68.30, okay? Now, in terms of, I'm just going to do a few more dollar pairs, some euro correlated currencies, and some minor commodity currencies that look good, and then we're going to shift over to some crosses. The next pair is going to be US dollar, Swedish krona. Right, USD SEK. It's a nice trending pair. Got a great move up there. I think it's about 8%, isn't it? And then we lost as we came down. We got stopped out. Then we tried a long too early. Didn't work out for us. But this morning, again, an aggressive entry just above the high of the day. Okay. And off we run. Now, if you're doing this one fresh, you're looking for 11, which is the monthly resistance level up here. I think we may go even higher. I would go through these candles here, okay, something like 10.79, and then just pop my stop back behind the 10.60 level. So basically, let's say 10.57. You get about a 3 to 4 to 1 in terms of risk to reward if you did that. Obviously, Swedish krona impacted by what's going on in Eurozone. Another euro correlated currency, USD/CZK, correlated with the Eurozone. It's heavily exposed to Russia-Ukraine conflict. Lost a lot of trade. Czech Republic also just has such huge exports to the zone. Just going to 26 in our view. Now, in terms of this one, just want to check where is it? Oh, here it is. Yeah, it is 26. So basically, off the top of my computer screen, or just at the top of my computer screen. But how would you play this one if you wanted to do it? Basically, I would go long on a new high. So 24.60, stop behind the two bodies I'm highlighting here, and then see if she runs. But yeah, we're really looking for the dollar hopefully to follow through strongly to the upside tomorrow. Now, in terms of when you're trading, when you stop too close, you can see I normally give it a little bit of breathing room, otherwise it's just going to get stopped out. There's a lot of noise in these markets. Okay, where do I want to go to next? I'm going to go to one that I haven't done well in USD pairs, which is USD MXN. I'm sure regular viewers know that. It's perked up today, and I like this one. Just show you on my page. Where is USD MXN? From our perspective, big support on this trend line here. That's when we poke through on that big blue. Minor support on that trend line. So we just want to give it a little bit of room. And then we're looking for 21, which is also monthly resistance. Now, if this comes off, it's a great risk to reward trade. But how would you play it if you're coming in? My own view is you need to put your stop behind the 1980 level. So you've got support on the bodies there, here. Okay. I would wait for maybe just a poke through the high of the day, then see if she runs an in-trail stop up. Now, if we do get a big move to risk off, the Mexican peso emerging market, it will get hit hard. Okay. It's a commodity currency anyway, but it's been very resilient because it's got good interest rate on it. So we're looking for this one to potentially run. You don't need a big position. It's a very volatile pair. USD ZAR is going to be my last USD pair. This one's been a really good performer for us. Great run all the way up there. Did get stopped out. Now we're back long. Now, in terms of, I'll show you my chart. Just if you wanted to come in, I think below the bodies that I'm highlighting, put a stop, take it through 1750, and then see if it runs to monthly resistance. So 1 month resistance. Yeah, I'm going up to the 19 level. Okay. The fundamentals are not good for South Africa at all. Commodity currency, emerging market. So yeah, dollar really having a nice move. We'll see if it continues. Okay, now I want to look at some crosses. Now I want to do some Swiss franc crosses first. All right, we're on Euro CHF. Now, I think it was just under 3 weeks ago I looked at this pair, and Euro obviously going down quite nicely. I was looking for this level to hold and price to turn down, but we ran on to the 98 level. Okay, but that is a reversal candle, and we came in at 97.10. Now we're picking up traction to the downside away from 97. This is a really good looking long-term trade in my view. I think we're going as low as 90, so possibly another 600 pips. You need to have the stop on entry, I think, back behind here. So basically behind the round number, I'm going to say 97.30, looking for 90. Just think that's a nice bearish candle today. You could wait for a break to new lows, but Swiss franc is going up in our view. Safe haven. If you get big flows away from risk, the Swissy will do well. Also, Swiss National Bank, I mentioned this in my previous video, want a stronger Swiss franc to contain inflation, and they have to bring $1 trillion in overseas assets back to Switzerland. So they have to liquidate overseas holdings and convert them to Swissy, which means that will firm the currency. Really like look at this for long-term position trading. Okay, in the Swiss franc video last I did, the AUD CHF. This is where sometimes market action really is frustrating. Let me just check my level on this one. That's Euro CHF. On AUD CHF, 66.80 we're short. Okay, but look at this sideways action. We faced that for a few weeks, but now she's really rolled over to the downside. This one's going to 60, so hopefully another, well, I think it's going 60, hopefully another 500 pips. I think she's a sell. Okay, we're just through the 65 level. Where would you put the stop? I think you need to be clear of the three bodies here. Okay, behind the tails, I'm going to say 65.80. Good downside potential. I think choppy action has ended now. Be off to the downside. CAD CHF. This one we were short just below the 75 level. Again, after I did the video, it comes up tests, but now we're nicely down. We're a couple of hundred pips away from the level. How would you play this one? Just you see where the tails are. So I'm going to say 72.80. I would probably go 74.20 behind these bodies in the round number. And in terms of this one, CAD CHF, just need to check my target, 70. Sorry, a bit tired now. So there's decent downside in this one. Not too much risk in my view. So I think the Swissy looks really good. In terms of what I want to look at now is I want to look at a yen pair. Okay, we have tried some swing trades in the yen, but the yen has just got absolutely it's been basically battered, hasn't it? But I'm just thinking that for very small positions, we may be near a turn. Hopefully, I want to look at one pair, Euro JPY, to finish up with. Right, so I'm just doing a chart generally on the yen first of all. This is one to do with USD JPY, but the comments apply in many JPY pairs. Quote here comes from the market here. It's hard to find superlatives to the JPY move, but Mizuho sums it up well. JPY passes 144 USD, moves 3 times as much as in a normal year. The yen, we know why it's in free fall, obviously, the Bank of Japan's policy, but they're now at levels, or the yen is at levels, so the Bank of Japan have traditionally intervened. And when they do intervene, you do see big reactions in the yen. Also, too many speculators have gone short the yen, and too many speculators are long of the euro. Okay, so Euro JPY is an attractive pair, so we're just going to take a look at it. So here, come through this previous resistance. This is morning's chart. Look at that poke there. Could that be exhaustion? But still blue there, or red here. Just like to see this level break. If we break down through it, then it should fall really, really hard. I see so many commentators saying there is nothing now to stop the yen from falling. That's very often when you do get a trend change. So in terms of Euro JPY tonight, not doing much, just red hanging above the level we want to go short through. So yeah, there's some pairs. In terms of if you're trying to catch big trends, keep an eye on the really big fundamentals. Don't put your stops too close. Give the trade room to breathe. And also when you're trading, a lot of people get really, I don't know, what the hell would I call it, annoyed if they get stopped out. I'm actually, thinking there's a high probability of me getting stopped out on this one, but the expected payout against the risk is really, really good, and it's worth going for. So we'll see what happens, but there's some pairs to consider. I hope you found the video useful. Thank you for watching.